Hello and welcome to this lesson. Today we are going to set you off with your first piece of homework. Now, what I wanted to talk to you about here was order blocks. And if you feel like you understand order blocks, I still want you to do this for the purpose of trusting the process, because this information is going to be very, very vital. Now, what we have to identify with an order block is where we find them and where we find the highest probable order blocks. Because basically, when you see price action moving higher, let's just use this as an up candle, you are looking for a series of candles. But when price action comes lower, you have got a valid bearish order block, which is sitting right here. And that is the last up candle before a move in the opposite direction. And if you were looking at it in the opposite way, so for example, if price action was doing something like this, you would be looking for a series of down candles just like this here. And then when price suddenly shifts to the upside like this, you are looking for the last down candle, which is going to be right here, before price moves in the opposite direction. So the simplest way to identify an order block, to first and foremost, is the last up candle before price moves in the opposite direction and the last down candle before price moves in the opposite direction. This example right here is going to be your bullish order block. And this example here is going to be your bearish order block. The reason this is now a bearish order block is because price action is known to come back to this order block and become bearish. And essentially it's starting a bearish move. And vice versa, in a bullish environment now, because price action was bearish and now is bullish, we have this valid order block. We would expect price action to come back to retest this bullish order block and take us in our direction. So this essentially is a trade opportunity. There are obviously other confirmations to make this higher in probability, but this is a trade opportunity. This is your first setup. You could trade just looking for order blocks. And that's going to be the interesting part of our homework next. Now, there are certain things which I do have to kind of talk to you about here. When you see a series of down candles here, let's just say you've got these random candles moving to the downside. The idea is that you are inside some sort of higher time frame key level that is a point of interest, which we're going to talk about in another lesson. But inside this level, if the next candle, bear in mind this is the closing point, if the next candle comes and opens here and it completely engulfs the entirety of this last candle and turns bullish, even before price has moved higher, this now is a valid order block. And this is a very, very powerful way in which I look for entries, which you'll come to realize in the live trading sessions, because you are only looking for this engulfing move above this area to create something called a change in the state of delivery. So that is a change in state of delivery. Therefore, price action is giving you that order block. If price action breaks all of this structure here, let's just say for argument's sake, that was a high right there, and price action, as you can see, goes in the opposite direction, creating this bullish order block, but actually comes above this structure here, that would be called a break of structure. That is how I would utilize that. And the same situation would occur where we would expect price action to come back and push back into it. We would also expect price action to come back down here, retest this candle, and then push higher. You could choose any of these particular ways when it comes to identifying bullish order blocks and bearish order blocks. The higher probable situation would be to identify the break of structure as opposed to the change in state of delivery. But this is what I utilize more for entries, which you'll see in my live trading sessions. But I'm looking for something specific to happen in here on another time frame, which again, we're not trying to jump the gun here. This is another lesson. So each has a place for order blocks. So to look at this particular chart right here now, if we just pay attention to this up candle right here, because you can see that price action was moving higher in this trending move right here. And that is the last up candle before price is moving lower. Price action has moved lower and broken this structure here because price action was trending lower and now has broken this structure here. Again, market structure is going to be another lesson for another time, but we're just looking at the last up candle before price moves down in this example. The point of measure is going to be the opening of that particular candle. That is your entry line right there. And as you can see, price actions come all the way back up, reacted to the downside, targeting this area of liquidity, which is resting right there. Your entry in this example could have literally been off this order block with your stop loss above the wick. You could have been targeting this level right here. That is a trade. That's without all of the other confirmations that we currently have in place as well. That's how powerful order blocks are. Another example would be this one, which is playing out as we speak. You can see price action is moving lower. We are then presented with this order block, which is sitting right here. And we have the opening of this bearish candle. That is a valid entry. You could, because this wick's quite big, I would probably bring it down to this wick here. Again, stop losses is something we'll cover. That is a trade. And that's the last down candle before price moves higher. There are order blocks which work higher in probability. And basically, they are order blocks which have actually personally swept liquidity. So if you look at this order block here, just as an example, if you look to the left, you should be able to identify this liquidity sweep, which is sitting right here. When price done that, it shifted in its intended direction. That has created you a very highly probable order block. Back in the day, I called this an FU candle because it's saying FU to the liquidity, but it is just an order block. The less probable order blocks are the ones which sit in the middle of these particular ranges. So for example, this order block here is higher in probability because you can see this is the last up candle before price moves lower. Price action has come back into this one many, many times and reacted to the downside. So there is a trade opportunity right there, targeting this level or just following it down. You can even look a little bit closer here and be able to see that we have another order block here. Now this one, if you had your stop loss really tight above this level, you would have been stopped out right here. You would have seen you'd have been stopped out. That is because that order block is not higher in probability because this order block hasn't swept any liquidity on its left. This order block has just mitigated into this higher order block which is the order block which swept these highs right here, which is why this one is the stronger one for your entry, and this one is not as strong. This order block, which is right here, is not as high in probability because it hasn't been responsible for sweeping liquidity. It is mitigated back into this order block right here, as you can see, and that order block is higher in probability because we have swept this liquidity. You can go on and on and on. Now, order blocks are not always respected, but a lot of the time, especially if you're in alignment with higher time frame market structure and market structure in general, that is going to give you really good premise for entries, for order blocks, for confirmations of trades. Now, this is the bearish order block example. This is the bullish order block example. I'm going to talk to you in the next lesson about what your homework is going to be regarding getting you started in helping you identify all of these order blocks. But for now, just familiarize yourself on your chart. Even if you go to a completely random chart on a completely random time frame and you just spend your time, in fact, this can be first part of your homework. Just spend your time looking for the last up candle before price moves lower, for the last down candle before price moves lower. There are two order blocks right there. You can then look to identify, again, the last down candle, price moves higher. See if we can note how many times these order blocks actually get respected. You can see here, we have this order block right here, not as highly probable because it didn't sweep liquidity. However, we also have this here. We did respect it for a little while, but then we would have been taken out with our stop loss. You can see here, price action created this down candle, this random candle here, didn't respect it. Price action went lower into this order block right here, which is in the middle of the range. I don't like these order blocks because they're in the middle of the range. I like them to be at the bottom of the range. You can see here, we've got a bearish order block. This order block is really, really strong for me because we swept all of this liquidity right here. Price action came back into the entry of this order block, even lower, and then pushed higher. And that would have been a really nice trade setup. You can see right here, we've got this last up candle before price moves down. If you measure that entire candle there and you open it up, you can see you could have potentially taken advantage of a selling move. And then you can look and you can maybe go into replay mode, because when you see this forming, that is what I was talking about earlier. We now have an engulfing, we have this up series of candles. We have an engulfing candle right here, closed. That is now a bearish valid order block, meaning you can look for setups inside here on a smaller time frame. But for the sake of clarity, let's just say you entered straight away, then you would have seen the price action nearly tagged you in, because price action should be coming back and helping you get in the trade. You can see here, price action didn't quite break this structure right here, as you can see, but we did two candles engulfed this candle here. So what that kind of looks like from a replay mode is we now have a valid bullish order block. You can set a position, for argument's sake, in here, and you can see price action come all the way back down and has you in profit. So just go to a random chart. It doesn't matter which chart you go to a completely random chart, mark out all of the order blocks, mark out how many times they get respected, how many times they get violated. And you will be pleasantly surprised, I believe, with how powerful these order blocks are. With that, I will see you on the next lesson.